These last 2 weeks, some of you have been like, I know it worked March through August. I don't know if this is going to work now. We're here because we want generational wealth. Generational wealth is not built in 3 months. So I know the last two have been turbulent, but I want you to pause and reflect and understand that everything is going to be okay. So even though the market slid down from all-time highs, I want you to just relax, be calm, and realize that everything is going to be okay. So what is making the market slide? I want you to have a perspective on why, opposed to just guessing. So there's a couple things that are at play. So we have a trade war that is still going on. We are still in a pandemic that some people think is a hoax, but it's not. We have an election coming up, which is rocky, and we don't know who is going to be the clear winner. And if an incumbent sits in the chair, we don't know what the policies will be. And on top of that, we've have civil unrest. We haven't had these combination of factors probably in 60 or 80 years all at one time. It's a scary time in the market. Yes, it causes volatility. Yes, people are panic selling. Yes, but this is the reason why we are sliding. And when we have that in a pot of gumbo in the market, it produces uncertainty and fear, and people begin to snatch their money out of the market. But also, I need you to look at this. In September and October, they historically have been two of the worst months for the stock market. So Lehman Brothers died during the last recession in September. Black Friday of 1987 happened in October. Of course, 9/11 happened in September. And what people don't realize who were not in the market then, it caused chaos the month of September and October. The stock market crash of 29 happened in October. And then since 1950, the Dow has averaged almost 1% down, while the S&P 500 has averaged 0.5% decline during September. So I want you to know this is normal. This is normal. The market really likes stability and safety. So a lot of you keep asking, when are we going to go back up and have these historic runs like we had a few years ago, or even from March? When the economy is stable. We're still fighting a health crisis that is still global, but affecting us the most. Corporate debt is high. We haven't even went through the commercial real estate crash yet. So when the market has stability and everything is safe, that's when we can see higher highs instead of lower highs. In order for Biden to have a chance to be able to win, when I went back and was doing my research, the S&P 500 future needs to be at 3140.75 for him to have a chance to win. I need you guys to write that number down. If we are by 3140.75 within 5 days of election, because all of a sudden after our episode, everyone's reporting about the importance of the S&P 500 and not giving us credit. Yeah, I love you guys as well. But this is the number that the Democrats will need to hit in order for Biden to have a chance to be able to win in November. So I need to correct something. A couple episodes ago, I said if you invested 10 years, your return would be 18.4 million. It was a miscalculation because I was calculating numbers for a friend and I put the wrong slide on here. And I don't want you guys to think that I'm capping. So if you did 50K per month for 10 years, which 99.9% of the market does not have, you would be at 18.4. But if you did 5K, you would be at 1.9. So you can go to any return calculator, type in QQQ and go from August of 2020 back to August of 2010, and you can extrapolate that data on your own. I don't want you guys to just think that we're out here giving out fake news or fake numbers. Over the next 10 years, we will have, over the next 50 years, we will have 10 major crashes. And no matter how much you emotionally prepare for them, all of them are going to be scary as hell. There hasn't been one crash that I've seen thus far, or even small pullbacks that I'm not like, man, this one doesn't feel comfortable. All of them are uneasy, but I need you to stick with the plan. For my conservative investors, continue to invest in indexes. For those of you that have been, You see how much less stressed you are than people that had call options last week. Slow and steady wins the race. We'll have one significant drop of 10% every single year. That is expected, just like when snow falls in New York or Chicago. It's going to happen. Just plan for it and adapt accordingly, please. The average length of recessions prior to World War II was 22 months. Shout out to Akil. I appreciate you. But since quantitative easing, the average length of a recession is only 11 months. We are not out of the clear. The market is recovered, but the economy still is not doing well. Go to the stores. Go ask people that you know, how is the job market for them? We're not out of the clear yet. And like I said, we probably won't be until March or April of 2021. So the 5 big threats that could cause the next crash, we will talk about next week because we have a guest and we want him to give him ample room to be able to talk because he is an expert at what he does. And I want to read this disclaimer really quick for you guys, if you can see it. Let me know if you can see the screen or not.
Yeah, we can see it.
Okay, great. So I want to say this. All opinions expressed by Mr. Herrera on this show are solely his opinions. Mr. Herrera's statements and opinions are subject to change without notice. So he may not tell you on Twitter or IG if his stance has changed, okay? The information provided is not a recommendation or a solicitation to buy or sell securities or any other financial instruments. Past performance is not guaranteed and not indicative of future results. Mr. Herrera does not guarantee any specific outcome or profit. You should be aware of the real risk of loss and following any strategy or investment discussed on this show. So all strategies and investments discussed may fluctuate in price or value and may carry fees. Investors may get back less than invested. Investments or strategies managed by Mr. Herrera may not be suitable for you. The material discussed on the show does not take into consideration your particular investment objectives, financial situations, need, is not intended as recommendations appropriate for you. So you must make an independent decision regarding investment or strategies mentioned to you on the show by him. Before acting on the information in the show, you should consider whether it is suitable for your particular circumstances and strongly consider seeking advice from a financial professional. We need to use this. So, but no, thank you guys so much. And I just want to tell you guys once again, we're not out of the clear in terms of all the doom and gloom in the market. We'll continue to invest consistently. And then once we get in the clear, you'll be very happy that you did. So thank you guys so much.
I appreciate that, brother. So,
yeah. I think that was an understatement, man. If anybody was in that call on Saturday, man, elite.
It was a blast.
Elite. It was so incredible that I had to call you after because people were hitting me like, yo, this is ridiculous. This guy is incredible. I said, yo, bro.
It felt like when Jada and Styles used to go to Hot 9, right? Since they one of the best rap duos of all time. Everybody put in chat who y'all think the top rap group of all time is. We had a lengthy debate this weekend.
Shout out to Kiss and Styles, man.
Yeah.
My graduates from my school being Forbes, bag drop.
Bag drop.
A mic drop, bag drop.
Bag drop.